A very good afternoon, all of you. Hope you all are doing good. May blessings be upon you all. Welcome to Commerce first year class. Day before yesterday, we have started final accounts. Okay, we started final account. That is the last step in accounting process, or that is the last step in accounting cycle. Okay, and I told you final accounts of sole proprietor comprises of three things, or it is prepared in three steps, I should say. One is trading account, second one is profit and loss account, and the third one is a statement which is called as balance sheet, which is balance sheet. Okay, so day before and yesterday we did problems on trading account, and yesterday we started with profit and loss account. If we have a quick review, I would say trading account takes all direct items, direct expenses and direct incomes. Profit and loss account will take all indirect expenses and indirect incomes. Or otherwise, I can also say all the expenses related to purchases or all the expenses related to factory we take in trading account. And similarly, all the expenses of office or say administrative purpose, expenses incurred for administrative purpose or selling and distribution purpose or for financial expenses, all such things we will take in P&L account. Okay, so let us move forward and we do problems where we have to prepare from the given data, we have to prepare trading and P&L account. Okay, after this, we will practice how the balance sheet would be and what are the items that appear in the balance sheet. Okay. Take out question number, page number 271. And the question is question number 7. Page number 271, question number 7. He's asking us to prepare trading account and P&L account. Trading account and P&L account. So we will prepare it simultaneously. We'll prepare both the ledgers, both the trading account and P&L account simultaneously. Okay. This is our trading account. And then here I will prepare P&L. Okay. This is the format of trading account, and this is the format of profit and loss account. In short, we call it as P&L account. Trading account and P&L. So this is our trading account, and this is our profit and loss account. Trading account for the year ended on. Profit and loss account for the year ended on. This is how we write the heading. Trading account for the year ended on. Profit and loss account for the year ended on. Particulars. Amount. Particulars. Amount. Same year. Particulars. Amount. Particulars. Amount. We are preparing trading account and profit and loss account simultaneously for question number 7 given on page number 271. Let us see what are the items given. First item is opening stock. Opening stock will appear in trading account on the debit side. Opening stock will appear in trading account, debit side. Purchases, purchases also will appear in trading account on the debit side. What is the amount of purchases given? It is 7,700. I am writing the amount in the inner column because we may have purchase returns. And I told you purchases are taken as net figure. Purchases minus purchase returns, sales minus sales return, like this. So purchases 7,700 I have taken on the debit side in the inner column. Then we have rent. Rent is a administrative expense, or it is a office expense that I'll take in P&L account. What I am doing, I am preparing trading account and profit and loss account simultaneously, and I am simply eliminating the items given in the trial balance. Then sales. Sales will appear in trading account credit side. What is the value of sales given? 15,500. So I'm taking it in the inner column again because we may have sales return. Then traveling expenses. Traveling expenses will appear in P&L account. Traveling expenses is the official or administrative expense, or selling and distribution expense we can say. So that I'll take in P&L account, 400. Then we have interest received. Interest received, it's an income that we take on the credit side of P&L account. Interest received. What is the amount? Amount is 800. Interest received amount is 800. Then clearing charges. Clearing charges are a direct expense we take in the trading account. Clearing charges. Clearing charges are given as 400. Then we have closing stock. Closing stock will appear on the credit side of trading account. Closing stock will appear on the credit side of trading account, and the amount given is 4,000. Next we have salaries. Salary is a official expense. It's an expense incurred in office. Salaries is given as 1,200. Salaries are given as 1,200. Wages. Wages are a direct expense. They would appear in trading account. Wages are given as 750. Then we have purchase returns. Purchase returns are deducted from purchases amount. Purchase returns are deducted from purchases amount. 200 are deducted and we take 7,500 in the outer column. Purchases 7,700 is given and purchase returns are given as 200. Then we have discount allowed. Discount allowed will again go to P&L. Discount allowed will go to P&L, 525. Then we have sales return. Sales returns are deducted from sales, gross sales. Sales returns are given as 300. So this figure would be 15,200. Then we have custom duty. Custom duty is also a direct expense. All the duties paid are direct expenses. It will appear in trading account. To custom duty, it is given as 600. Then we have trade expenses. Trade expenses will go to P&L account. Trade expenses will go to P&L account, that is 700. Okay, so all the items are clear. All the items are taken into consideration. Now what is left? Balancing part is left. Now let us see how the figures would appear. When we close the books of account, how the figures will appear. Take the credit side total. Credit side total is 19,200. Credit side total is 19,200. What about debit side total? Total of all this 4, 2, 7, 11, 7, 12, 1, 12, 1, 12, 7, 13, 450. what I am getting is 13,450 is the total on the debit side. Okay, so if you deduct 19,200 minus 13,450, you'll get 50. 11 minus 4, 7. 8 minus 3, 5. What do we call this 5,750? Yes, we call this as our gross profit. What is this, guys? This is our gross profit carried down to profit and loss account. Pay attention, please. This 5,750, the difference between credit side total and debit side total will appear on the credit side of our P&L account now. And what do we term it? We term it as gross profit. So this amount, I will take it here as by gross profit brought down 5,750. 5,750. Okay. Now let us balance our profit and loss account. Let us see how this would appear after balance. Okay. So what is the total we have here, you see? The total is 6,550. 6,550 on the credit side. P&L credit side 6,550. See what is the total on the debit side? This total 650, 1,050, 2,050, 2,250, 2,250. And if you do the totaling, see the total of these three I got as 16, 22,050 and 5 plus this 12, 25. I told you yesterday, don't go for summing up like this. Break up. Take a breakup of 3, 3 and do the totaling. So 1, 2, 3. The total is 2250 and the rest to 1225. So it is 3,475. Debit side total is 3,475. Okay, it is 6,550 on the credit side and 3,475 on the debit side. Subtract 3,075 I am getting, and that 3,075 is called as our net profit. What is it? It is the net profit carried down to balance sheet. We'll take it to balance sheet. Okay. 6,550. Is it understood? See, day before we did only problems of trading account. Yesterday we did problems of P&L account only, and today we started with doing problems wherein we have to prepare both trading and P&L account. Okay, and then subsequently we'll also learn how to prepare trading, P&L and balance sheet. That is how it will come in the examination. He'll give you your trial balance. In the question, he will give a trial balance, and we are asked to prepare trading, P&L account and balance sheet. Okay, so before going to balance sheet, we'll do one more problem on trading and P&L account so that you can get a good command on this. You can get good, get familiar with all the items of trading and P&L account. Let us take question number 8. Okay, we are doing question number 8. Prepare trading account and profit and loss account of Suresh Traders for the year ended on 31st December 2017. He is asking us to prepare trading account and P&L account of a firm by the name Suresh Traders. Okay, shall we? Yeah. So, this is our trading account. This is our P&L account. Will this be sufficient? Yeah. Trading account of Suresh Traders for the year ended on 31st December 2017. Similarly, profit and loss account of Suresh Traders for the year ended on 31st December 2017. Okay, ready? So what are these columns? Yeah, particulars, amount, particulars, amount, particulars, amount, particulars, amount. ठीक है? So we are doing question number 8, page number 272. What is the first item? We are preparing simultaneously. We are preparing both the accounts simultaneously. What is the opening item? Stock on 1/1. This is the opening stock. Stock on 1st January 2017. That means it is the opening stock. Then sales. Sales will take on the credit side. Buy, sales. I am writing this amount of 28,900 in the inner column because we may have sales returns which we have to deduct. Similarly, when we are writing purchases, we have to write the amount in the inner column. If any purchase returns are there, we can deduct those and take the net figure in the outer column. Next is carriage on sales. Carriage is an expense. Carriage is an expense. Carriage on purchases is given, we'll take it to trading account. Carriage on sales is given, we take it to P&L account. Okay, so carriage on sales, we'll take it to P&L account. Carriage on sales. It is also called as carriage outward, and carriage on purchase is also called as carriage inward. So carriage on outward is given as 425. Next is salaries. Salary is also indirect expense shown in P&L account. Salaries 3,000. Salaries are given as 3,000. Discount received. It's an income. Let us say by discount received. Non-cash. Discount received 3,975. 3,975. Okay. Then office rent. Office rent is a official expense. Office rent. It is a expense debited to P&L account. How much? 1,500. It is 1,500. Then clearing charges. Clearing charges will come to trading account. Clearing charges will come to trading account, and clearing charges are given as 325. Then telephone charges. Obviously, official expense, no? Telephone charges. Telephone charges 1,275. Then sales returns are given. Sales returns are given as 400. So we deduct this and take 28,500 in the outer column. From sales, we deduct sales return and the net amount we take in the outer column. Then we have purchases. Purchases are given as 13,700. 13,700. From then carriage on purchase. Carriage on sales we have taken here Carriage on purchase is a direct expense. We take here. Carriage on purchase. This is also called as carriage inward. Carriage inward. It is how much? 600. Next is wages. Wages are a direct expense again. Salaries P&L. Wages trading. It is 2,825. Next we have discount allowed. If you see discount reserved, I have taken here on the credit side. Likewise, discount allowed will be taken on the debit side. Discount allowed is given as 550. Then factory rent is given. I told you, if you remember, any expense related to factory will go to trading account, whether it is factory rent, factory insurance, factory lighting, any item will go to trading account. Next is custom duty. All sorts of duties, custom duty, excise duty, import duty, all these also will appear in trading account. Then stationery. Stationery is a P&L item, official item. Stationery. Stationery is given as 750. Stationery is given as 750. Then we have purchase returns. Purchase returns are deducted from purchases amount. Purchase returns are given as 200. If you deduct, you'll get 13,500. And the last item is closing stock 8,800. Closing stock 8,800. We have removed, we have cleared the given trial balance, let us say. Now what is left? The balancing part is left. Okay. So we have to do the balancing. First, let us close trading account. The total is 37,300. 37,300. Credit side total is 37,300. Okay. Then let us see what is the total on debit side. I told you, no, take 3. It would be easy. 15,8, 15,8, 15,8, 16,1, 16,7, 18,7, 18,750, 18,750 and 8, 19,550, 19,6, and 20,003. It is 20,750. 20,750. Debit side total is 20,750. So what is the balancing figure we are getting? You see 16,550 is our gross profit. 16,550 is our gross profit. Where will we take this gross profit to? We will transfer it to profit and loss account. Right? So this item I'll take on the credit side here by gross profit brought down 16,550. Okay. Now we have to balance P&L account. We have to balance P&L account. So let us see how it would appear. The total on the credit side is 16,550.39. 251. 20,525. Credit side total is 20,525. And debit side 3449, 495, 62, 62, 67, 68, 75. It is just 7,500. So 025. 13,025 is the net profit, and this net profit is carried on to balance sheet. So the total is 20,525. See, go through once. So this is question number 8 on page number 272. So in these two problems, we have learned how to prepare trading account and P&L account simultaneously. We'll take one more problem, page number 273, question number 10. Why are we doing these problems of the same pattern is you need to get familiar with the items. Where would salary appear? Where would wages appear? Where would office rent appear? Where would factory rent appear? Where would carriage on purchase appear? Where would carriage on sales appear? Where would sales appear? These items you should get familiar with. So if you practice more problems, you'll get a command on this. That is why we are doing multiple problems on the same pattern. Okay. So now let us take one more question. Okay, let us take one more question. As I said, question number 10, page number 273, question number 10. Prepare trading account and profit and loss account. Okay, trading and profit and loss account. So let us prepare the format first. Okay. Okay, format is ready. What are we preparing? We are preparing trading account and profit and loss account simultaneously. Okay, so what is the first item? Opening stock. Opening stock, trading debit side. Opening stock, trading debit side. How much it is? 3,700. Purchases, trading debit side. Purchases, trading debit side. Amount I am writing in the inner column because we may have purchase returns. Then sales. Sales, trading, credit side. Again, this amount I am writing in the inner column. We may have sales return. If so, we have to deduct from sales. Okay. Then return inwards. What is it given? Return inwards. Return inwards means sales return. Okay. Return inwards means sales return, and return outward means purchase return. Okay. So return inwards are to be deducted from sales and return outwards are to be deducted from purchases. So what is given? Returns inward. यानी sales return. Returns inward 250. 17,750. Then return outwards are given. Return outwards means purchase returns. Return outwards means purchase returns. Okay. Then carriage. See, carriage, I told you, carriage can be inward or outward. Carriage inward means carriage on purchase. Carriage outward means carriage on sales. But if only carriage is given, it is carriage inward. We assume it to be carriage inward. Only carriage is given, we assume it to be carriage inward, that is carriage on purchase, and take it in our trading account. Carriage is given as 450. Then wages. Wages too are a direct expense we take in trading account. Wages 2,725. Next, salaries. Salaries will go to P&L. Salaries, P&L, debit side, 800. Bad debts, P&L, debit side. Bad debts are a selling and distribution expense or a loss, let us say, irrecoverable debts. The amount which we cannot realize from the customers, that is called as bad debt. It is a loss. So we'll take it as 500 on the debit side of P&L. Custom duty. If you remember, I told you any sort of duty. Now, what is duty? Duty is a tax. So any sort of tax paid on purchases will come here in trading account. Then factory insurance. Again, any expense related to factory, whether it is factory rent, factory insurance, factory lighting, any item related to factory would come in trading account. So factory insurance, it will come in trading account 350. Then advertisement, it is a selling expense. It is a selling expense. We go to P&L. Advertisement 550. Trade expenses. This also will go to P&L. Trading expenses. Buying and selling expenses, you can say in short, it is 250. Discount received. It's an income. Discount received is a income. 1600. Interest received, again that is a income. Interest received, again is a income. 975. Depreciation. What is the next item given? Depreciation. I told you, no, depreciation is a decrease in the value of fixed asset. That is a expense, operating expense, or you can treat it as a loss also and debit it to P&L account. Depreciation. Carriage outward. See, if only carriage is given, we have taken it in trading account. Carriage outward, P&L account. What is the amount? Amount is 450. Amount is 450. And lastly, we have closing stock 4,600. We have cleared all the items given in the question, that is, say, trial balance. Now, what is left? Balancing part is left. Let us see what is the total on either side. What is the result of trading account? It is gross profit or gross loss. And what is the result of P&L account? It is net profit or net loss. Okay. Let us see the total on here. It is 7318, 22,350. Credit side total is 22,350. Okay, trading account, credit side total is 22,350. See what is the total on the debit side? 3, 9, 10, 3, 10, 7, 12, 7, 13, 4, 13, 4, 14, 14,000, 14,425, I think. 14,425 is the total on the debit side. So debit, credit side minus debit side you take. Credit side minus debit side, how much it is? 5, 2, 9, 7,925. What is our gross profit? 7,925. This is gross profit carried down to profit and loss account. This is a gross profit carried down to profit and loss account. Okay, so we should write this. We should write this on the credit side as by gross profit brought down, and the amount is 7,925. 7,925. Now see what is the total on the credit side. 7,925 plus this 7, 8, 8,000, 9,000. It is 10,500. 10,500 on the credit side. Then take on the debit side, what do we have? 8 plus 5, 13, 18, 18, 19, 21, 26, 30, 30, 3075. What is the total? 3075. 8, 5, 13, 13, 18, 8, 5, 13, 18, 15, 19, 21, 26, 30. 3075. Am I right? 5, 5, 5. 1, 2, 3, 7, 1, 10, 12, 22, 30. Yeah. So deduct 25, 4, 7, 4, 2, 5. This is our net profit. Net profit carried down to balance sheet. 7,425 is the net profit carried on to balance sheet. Okay. So till now we have done 3 problems. Okay, on trading and P&L account, preparing trading and P&L account. Simultaneously, we have done 3 problems. Okay. Now let us take a step further and learn how and what a balance sheet is. Right? As a part of final accounts, I told you, we have trading account, P&L account. These both are accounts, ledger accounts. And lastly, we have balance sheet, which is a statement. Balance sheet depicts the financial position of the business, where we take into consideration the position of the business as on a particular date, usually on the last day of financial year ending, that is 31st March, or sometimes we'll give 31st December. So as on 31st March, what are the assets owned by the business and what are the obligations or what are the liabilities of the business, that will be shown. So balance sheet is a position statement. What is balance sheet? Balance sheet is a position statement. And balance sheet is prepared by taking into consideration all the assets and liabilities. Okay. Balance sheet is prepared by taking into consideration all the assets and liabilities, and balance sheet is prepared basing on a accounting equation. Balance sheet is prepared basing on a accounting equation. The accounting equation is what? assets is equal to capital plus liabilities. Balance sheet is prepared basing on this equation, which is called as accounting equation. Accounting equation is what? Total of assets will be equal to total of liabilities plus capital. So in short, I can say, okay, I'll tell you when I'll show you the balance sheet or the application of this equation. I'll show you the application of this equation. Assets is equal to capital plus liabilities. Okay, so as I told you, it is a position statement. It is prepared by taking into consideration all the assets and liabilities as on one date. As on one date, usually on last day of the financial year ending. Okay? Let us see how a balance sheet looks like. Balance sheet can be prepared in two methods. One is called as permanence method. The other one is called as liquidity method. There are two methods. One is permanence method and the other one is liquidity method. So we will be following permanence method. We'll be following permanence method. How does a balance sheet look like? Okay. How do we write it? We write balance sheet of, write the name of the firm as on 31st March 2017, let us see. If you check, while preparing trading account and P&L account, I was writing profit and loss account for the year ended on. Profit and loss account for the year ended on. But when I'm preparing balance sheet, I'm writing balance sheet as on. Because as I told you, balance sheet is prepared on one particular date, taking into consideration the position of the business as on that date. Whatever is the position of the business on that particular date, that is what are the assets and what are the liabilities a business has as on a particular date, that only will show in the balance sheet. So we write it as balance sheet as on, or we write balance sheet as at. The left hand side is called as liabilities. This is amount. The right hand side is called as assets. And this is our amount. Look at each thing, what I'm telling you. Okay, pay attention. Right hand side is called as asset side. Left hand side is called as liability side. What do we take on the asset side? We first take fixed assets. But for you, order is not important. You can take as you remember or as you see in the trial balance. But normally it is prepared in a format, in a order which is called as permanence order, where we take machinery. All the fixed assets will take first. All the fixed assets will take. Land and building. Land and building. Furniture. You can have many more, but again, I'm not preparing a exhaustive list. It's just an illustrative list. Then we'll take investments. Okay, these are all fixed assets. These are all fixed assets. You can also take motor van, motor car, many more items will come. These are all fixed assets. Then we have investments. After investments, we take current assets. Stock, debtors, bills receivable, cash balance, bank balance. Enough for you, not more than. And if any prepaid expense is there, that will take. Prepaid expenses. I'll tell you what these prepaid expenses are. So this is how the asset side would look like. Assets are the properties owned by the business. Assets are the properties owned by the business. Take it on the right side of the balance sheet. On the left side, we'll take first capital. What is capital? Capital is the amount invested by the proprietor at the commencement of business. Capital is the amount invested by the proprietor at the commencement of the business. To this capital, we'll add net profit. What are we adding? We are adding net profit. Remember, we just now prepared P&L account, no? If you see, we had prepared P&L account and here we got this net profit. What did I write here? Net profit carried down to balance sheet. This net profit we will add to capital account when we are preparing balance sheet. So what do? We add net profit. And then we deduct drawings. There are adjustments also, but that I'll tell you later. Generally, we'll get these three things. Capital. What is capital? I said capital is the amount invested by the proprietor at the commencement of business. To that, we add net profit. From that, we deduct drawings. What are drawings? Anything taken by proprietor for personal use. Amount drawn by proprietor or stock taken by proprietor for personal use is called as drawing. So that we will deduct and we take the net figure in the outer column. Pay attention here. I said capital plus net profit minus drawings. Right? Then we take outside liabilities. This is called as internal liability. If any loan is there, that we will take. Bank loan. If the firm has taken any loan from bank, that we will take. Okay. Or any other long-term borrowings. Any other long-term borrowings. If any amount is taken by the firm as a loan for a long term, that we'll take. Then we'll take current liabilities, that is creditors. Creditors. Then we'll take bills payable. Then we'll take bank overdraft. Then outstanding expenses. Outstanding expenses. I'll tell these outstanding expenses and prepaid expenses while we are doing the problem. And here, the total on the liability side should be equal to the total on the asset side. Remember, I told you one accounting equation, no? Total of assets is equal to capital plus liability. So capital plus liability we are showing on the liability side. And assets we are showing on the asset side, obviously. So I told you balance sheet is prepared based on this equation. So your left hand side total and right hand side total should be equal. This is one clue for you to understand that you are right or wrong. Whether your solution is correct or wrong, it will depend on whether you get your balance sheet tallies or not. It's a small key clue, not always that if your balance sheet tallies that you did everything correct. Okay, but still. Again, I'm telling you, this is just an illustrative list. It's not exhaustive list. These are the only things that will come in balance sheet. If I say I'm wrong, there are so many things, but these are the ones which are expected in IPE. So I'm taking only those, right? So go through once. Right hand side we have assets. Left hand side we have liabilities. Assets are the properties of the business. Like you may also have some other assets called as intangible assets. We'll take here goodwill, patents. Okay, those are intangible assets. These are tangible. What are tangible and what are intangible? Tangible assets are the assets which we can see, which we can touch. Like say machinery, we can see, we can touch. Intangible assets are those which we cannot see, which we cannot see, which we do not touch, but they do still exist. Such assets are called as intangible assets. So goodwill, patents, copyrights, trademarks, there is again a long list. but expected is goodwill or patents. Okay. Shall we take one problem on this? Yeah, we'll take one small problem on balance sheet. Hope by this time you got familiar with the items. See, what do we take on the liability side? Capital plus net profit minus drawings. And on the asset side, then rest, bank loan, long-term borrowings, creditors, bills payable. If you look at all these are the obligations. ये सारे business के कर्जे हैं. So सारे कर्जे हम लोग liability side बताएंगे और सारी properties हम लोग asset side बताएंगे. Okay. So we'll do one small problem on this. Page number 273, question number 11. Page number 273, question number 11. What are we doing? We are preparing a balance sheet. We are preparing a balance sheet. Left hand side is called liability side. Left hand side is called liability side. Right hand side is called assets side. Our liabilities should be equal to assets. Total of liabilities should be equal to total of assets. How do we write the heading? It is balance sheet of, write the name of the firm as on. What is the date given? It is 31st. Balance sheet of Yadagiri. What is the name given? Balance sheet of Yadagiri as on 31st December 2016. Okay. Now, what are the items? Capital. Capital will appear on the liability side. Capital will appear on the liability side. Amount is 35,000. I am writing in the inner column. Sir, why are you writing on the inner column? Because we have two adjustments here. One is net profit. The other one is drawings. If we have to give adjustment to the effect. Then machinery is a asset. Take on the asset side. Machinery, what is the value given? 60,000. Creditors. Creditors are a liability. Creditors are a liability. 17,500. Loan. Loan again is a liability. It's an obligation. Karza hai. So 22,500. Then debtors. Debtors are an asset. Debtors are the amount which we owe from the people, from the customer. The customers owe to the firm. Okay, it is 34,000. Bank overdraft. We have overdrawn from bank. It is a liability. Overdraft. Overdrawn from bank. 24,000. Then bills payable. Again, it is a liability. Bills payable is a liability. How much? 9,000. Then we have bills receivable. Bills receivable is a asset. Bills receivable is a asset. Furniture. Furniture is a asset. Fixed asset. Net profit. What do we do? Net profit will add to capital. And then closing stock is given. Closing stock again is a asset. Closing stock is 8,000. Net profit, there are no drawings. So we'll add this and write 47,000. Check the total on liability side and asset side. It should tally. Okay. 68, 98, 112, 1, 1,20,000 and 57, 27, 69, 79, 86, 87. Again 1,20,000. Both on the asset side and liability side, the total is equal. So our balance sheet got tally. Okay. Hope you are familiar now. See, we have done trading account, P&L account, balance sheet. Now we can take up questions wherein we will be preparing all the three, both the ledgers and the statement. So tomorrow we'll be doing problems on that. Here I am concluding the session. Take care. Goodbye.